Okay, Paul, we will get started so that by the time the introductions and other things are carried out, uh, more members will come. So, good morning to all of you. Good afternoon to you, Paul, from Melbourne, Australia, and any others who are from overseas. Our keynote speaker today, Professor Paul Mehta, the Vice President of CMA Sri Lanka and the Vice President of the South Asian Federation of Accountants, Mr. Hennaka Bandara, the President of the Institute of Chartered Accountants and also Council Member of CMA Sri Lanka, Mr. Manil Jayasinghe, and also a Senior Partner at Ernst & Young, Council Members, members of CMA, invitees, ladies and gentlemen. Let me welcome you this morning to our series of seminars we are having during this period of the COVID-19 pandemic. One of the good things that have happened is that we have been able to connect up with not only the local people, but also foreigners. This has been there in many of our seminars that we have held, and today too, it is someone from overseas who will be speaking to us, Professor Paul Mehta. Now, today's topic, I'm sure, would be of importance to all of you because we are going to speak on the finance leadership during a crisis. The COVID-19 pandemic has really resulted in a crisis for all. We had a period that we had a lockdown. Then, of course, it was relaxed. We were doing quite well, and everyone thought things were going very well. Then the second wave came, and then things went bad. But now again, all are very hopeful with the vaccination. So the ups and downs are there, but businesses are going. Only 2 days back, they published the results of some of the leading quoted public companies, and all of them have done far better than what they have performed earlier. So there seems to be some magic in the COVID-19 pandemic, but I'm sure they have been able to overcome a lot of these adverse difficulties. And of course, what we are going to discuss is really one of the key areas where the finance leadership is required. Now, everyone knows that strong financial leadership is needed for any organization. CMA, we have set up a separate committee to help the SME sector. Now, here we find that finance is really a major problem. Not only that they are unable to get maybe facilities from banks, but keeping of books of accounts, financial leadership is very, very lacking in those. But maybe in the organized sector, the bigger companies, this is not so. And the finance people, we need to definitely play a lead role in steering all the companies. Today, we are talking only of companies, but I think most of our money, the taxpayers' money, is going to the government. So the government also needs to have this finance leadership if they are really going to come out of the trouble that they are in. Because we see the news items that are coming, the debt problem is there, the pricing problem is there, the cost problem is there. So all these are all connected with the finance area, but those who are really preaching are the economists. So I think we as accountants have to really make this felt by the people as to this leadership is really required, the finance leadership to take the country forward. So today we have, I think, very, very close known personality, Professor Paul Mehta, He has a MA in Accounting and Finance, awarded with distinction from the University of Lancaster, PhD in Accounting and Finance from the Monash University. He is a fellow of the Chartered Accountants of England and Wales, a fellow of the Certified Public Accountants or CPA in Australia, and GAICD. I think you need to explain that to us because this is not very common in our part. I'm sure it may be with your new areas of work. We are also very proud that he's an advisory council member of CMA Sri Lanka. So we are very proud, Paul, that you are helping us. You've been there from a long time and helping us especially in the academic front. Paul is an adjunct professor at La Trobe Business School at La Trobe University in Melbourne and was previously head of La Trobe Business School and professor of accounting and corporate governance. I know that he used to travel to Sri Lanka quite a lot, but now I think those responsibilities have been given to maybe some others. Prior to joining the school, he was an associate dean in the Faculty of Business and Economics at Monash University, Melbourne, and has received a number of awards and commendations for teaching excellence over the years. Paul's current research interests are in corporate governance and boards. He has won several Best Paper Awards and continues to publish papers in highly ranked international refereed journals. Prior to becoming an academic, Paul trained and qualified as a chartered accountant with Ernst & Young in London and subsequently spent numerous years with PricewaterhouseCoopers in London and West Africa. He latterly specialized in corporate finance projects in London and Melbourne. During this period, he was largely involved in projects relating to mergers and acquisitions and financial strategy. Paul is currently a member of CPA Australia's ESG Centre of Excellence and was previously a member of CPA Australia's Divisional Council. He is a graduate member of the Australian Institute of Company Directors, a non-executive director, a member of an expert panel advising the Institute of Certified Management Accountants of Sri Lanka, that's CMA Sri Lanka, and a member of the advisory panel and a member of an advisory panel to the Australian Accounting Standards Board. Paul provides a regular media commentary on corporate governance matters. So these are really matters of Paul relating to what he has done in Australia, but I would like to say something that is much more personal. I think he is a Sri Lankan. I think all of your friends know you as Rohan. Okay, old boy of St. Thomas's College, Mount Lavelia, and left St. Thomas's and went to UK, where he pursued his career in chartered accountancy at Ernst & Young. Now, when you talk of Ernst & Young, there is something that is really special for some of us who are here, especially for me. At that time, it was Turkwan Young's in Sri Lanka, and the senior partner at Turkwan Young's and our staff partner was Mr. James Mehta. And we are all very proud that he has a very proud son, Professor Paul Mehta in Melbourne, Australia. So this notice was sent not only to our members, but also our old TY colleagues or Turkwan Young's colleagues who I'm sure most of them who are present here, and from Ernst & Young, Manil is there to represent them. So I'm sure a lot of them are all listening. So we are very proud, Paul, that you are here with us because Mr. Mehta, Mr. James Mehta is one of the most respected persons in the accounting profession, someone who is held in high esteem. I must tell you that he is the one who really trained me also, not only me, but many others who have done extremely well, both in the professional life and also in business areas. So I think we are very proud that I have been able to invite you. He was one of our founder members of the CMA Sri Lanka Advisory Council. And now you have taken its place. So that's another thing that has happened. So with those introductory remarks, Paul, I will now invite you to make your presentation.
Thank you very much, Lakshman, for the kind introduction, and thank you to CMA Australia, CMA Sri Lanka for giving me this opportunity to speak to you. I'm going to get some my slides up.
Yeah.
Sorry, I'm having a bit of a problem.
It worked earlier.
Yes, yeah.
Right. Okay, fine.
Yep, we got that. Okay, so thank you very much and for the introduction, and also to briefly add that I've always said I do visit Sri Lanka, or I used to visit Sri Lanka a lot on business, and that I would look forward to the day when my father would be introduced as the father of Paul Mather, as opposed to the other way around, but I don't think that's ever going to happen given his rich and illustrious history. But I'm very proud to be associated with him. Look, my research, as Lakshman indicated, has been in the corporate governance and board space, and I have been a member of the ESG Centre of Excellence at CP Australia, and particularly when the COVID crisis hit, and I work in the governance bit, so there's about 3 of us working in that space. At CP Australia's request, we produced a lot of material in terms of leadership, in terms of responses, and so on various subtopics and topics, providing guidance to boards and finance leaders in order to sort of help them navigate the crisis. So a lot of what I'm talking about today is actually derived from that work. And I've also actually presented a similar, not identical, similar talk to a group of CP Australia members a couple of months ago as well. One caveat and apology, a lot of the examples I give will be international or Australia because I'm not living and working in Sri Lanka at the moment, and I did do some digging. And unfortunately, apart from some work by KPMG very early in the crisis, there's not a lot of published work on the impact on COVID on Sri Lankan business, etc. So that's the one caveat. This is the structure of my talk. And I'm not going to kind of repeat this. I'm just conscious of time. So the impact of this pandemic, and this just as an example of a crisis, has been quite profound. You know, some crises are fairly local. It could be a terrorist attack. It could be an earthquake or a tsunami, which is a bit wider. But clearly, this particular pandemic has been quite significant because apart from the financial impact, the health impact on operations, and in a sustained way, it also has had a global impact. So in that way, it's been fairly unique. So in terms of what I'm talking about here, whilst is contextualized a lot through COVID, could actually be applied to any crisis situation with some adaptation. So the first thing, I guess, is the first couple of days when a crisis hits. And it's often described as the equivalent of what the military describe as the fog of war, where you have very limited information, things are moving at a rapid pace. There's a lot of uncertainty, a lot of changing dynamics, and it's borderline chaos. And days 1 and 2, 3, I just made up the 1, 2, 3. It could be 5, it could be just 2. Is in fact a pretty dynamic, chaotic kind of environment. And a couple of things need to happen quickly. Typically, you will set up a crisis team or task force. You can call it what you like, but effectively it will be a crisis team or a task force. There will be a lot of operational matters and risk-related issues that you're going to have to deal with, but typically the ultra-urgent issues are going to be around health and safety, developing comms plans, and so on. But a particular thing the finance folk are going to have to do, particularly, well, in any organization really, is to do some quick and dirty, what I call quick and dirty financial assessments. You know, what's our cash situation? What's our immediate cash flow looking like? You know, a rough balance sheet, and so on. The specific issues and the urgency will vary between organizations. So what I put down here is what I think was typical, and some examples of, I'm on the board of a couple of SMEs in Melbourne, the sort of things that they got into, but the specifics is going to vary depending on the organization. It's very useful, and there's a lot of literature which basically says that, look, management and leaders need to attack a crisis and think of it in terms of a couple of phases. And they roughly correspond to time horizons. You know, think of it short, medium, long term, with one caveat. But a sort of a respond phase, a recover phase, and a reimagine or a reset phase. So the words can change. These are words I've used. I think Deloitte International, the consulting area, did something which uses similar words. I think they talk about reset. McKinsey's goes into 5 phases, which I think is a bit too cute. But nevertheless, it's useful to think of it and sort of start organizing your responses with these horizons in mind. Some things, however, need to be managed contemporaneously or at the same time. And what I mean by that is a lot of organizations in Australia and globally, right at the respond phase, and this is textbook, would also start having a group of people looking at the reset or the reimagine phase as well. And I'll talk about that a bit more in a minute. So in terms of the respond phase, and focusing largely around finance and strategy, obviously you've got your crisis team, you need to start adapting your business continuity plans, pull them out, see what works. The absolute important thing is, I've just said, stop all non-essential cash outflows till you've assessed your cash situation, etc. But a critical thing, and I guess sometimes it is harder for we accountants to take that mindset, is to try and do it by improving effectiveness and protecting your growth and sales capacity, and also having a mindset of not cost cutting, but spending wisely, right? But some organizations actually used to have created, I think, a cash war room or whatever, which again was a part of this, the crisis team that actually focused entirely on preserving and managing their cash. There's obviously a lot of things, immediate things you look at. A lot of organizations where they had the capacity immediately tried to beef up or move more and more of their, explore other sales and distribution channels like online in order to sort of keep cash flows coming in. One other thing that's worth talking about individually is, which I think is important, and again, the finance people will be central to that, is to start looking at some scenario analysis. There's so much uncertainty, you know, in terms of COVID, When I think of one company I was involved in as a board member, there was so much uncertainty about the loss of rental revenue from, it was a startup incubator type outfit, but also how long this crisis would go on for and when people will be able to come back to occupy space and so on. That we actually created, or not we, but they created 3 scenarios, essentially a best case, a likely case, and a worst case kind of scenario. Obviously updating the risk register with the financial impacts linking to the scenarios is important. But as I said, the one thing that is almost counterintuitive, but progressive organizations do straight away, is to actually set up a plan ahead team to say, lots of things are going to change. Let's try and plan ahead for what our world is going to look like when we come out of this crisis, so that we have plans in place and we've got things going, as opposed to suddenly waking up and finding that we're out of it and we're not able to adapt quickly enough to the new scenario. I'll talk about that in a bit more detail. Just again to emphasize, I mean, as accountants, we can, if we're not careful, get into sort of very cost-cutting mode. There needs to be balance. So this particular study, where a version of it was published in the Harvard Business Review back in 2010, studied firm performance over 3 recessions. These are US firms from memory. And what they found, the bottom line was that the firms that cut costs fastest and deepest had the lowest probability of outperforming the competition after the economy recovered. So the message in that is be judicious in how you cut costs and be very strategic about it. Recover phase, again, renegotiating debt facilities, potentially preemptive equity raising, certainly when within 2 weeks of becoming apparent that the crisis was hit and there's going to be some lockdowns, etc. in Australia, I can think of about 20 very large listed companies went for equity raisings to make sure they had sufficient cash reserves to sort of take them through that. The other thing, which the magic word that people would have heard a lot about, is looking at options to pivot. And I'm talking about just beyond changing your sales and distribution channels to move things online or whatever. That's an obvious thing if you can obviously do it. But I've given some examples. Airbnbs globally, they suddenly realized they had all these vacant properties, and they had a lot of first responders and health professionals who didn't want to live with their families because they were being exposed to the virus, and they wanted to live close to work or whatever, and they were able to marry this up, and it was a great thing they did for the health and safety of the health professionals and their families as well. I won't talk about the second one, but the third one was, and look, there's a list as long as your arm. Squatted was one that I particularly liked because they found that people were doing online shopping, but this was an outfit that realized, a platform that realized that that a lot of people missed being able to shop with their friends. You know, what does this jacket look like? I've never done it, but you know, it happens a lot. And sharing and sort of saying, yeah, that looks good or that doesn't look good, and exchanging ideas and all this sort of stuff. And they effectively created a platform where you were all online, you were in all the different parts, you could be in different parts of the world, but you could actually go through the shopping experience as a group of friends or whatever. So there's a range of operational issues that also need to be reviewed and updated. But one thing I'll get out there, because this is something that stuck in my head when I had to deal with a mini crisis in another leadership role, was something that I think was attributed to Churchill. There's some dispute about that, where he said that you never waste a good crisis. And What I mean by that is that the crisis could give you an opportunity to do some restructuring or reorganizing very quickly, because you can bundle it all with your response to the crisis uh, in a way that would take much longer, or you may not be able to if not for the fact that you have the crisis. So hence the never waste a crisis. The reimagine phase, this is quite important, call it reset, whatever. What economic history has shown that whenever you've had some sort of big exogenous shock like we've had here, the shifts to customer and other stakeholder preferences will change typically, and often that change will be sustained. So just as a personal example, if you told me 9 months ago, a year ago, whatever, yeah, about a year ago actually, that I would be doing 4 yoga classes a week, I would have laughed. And if you said I was doing it online, I would have accused you of being on something. Well, actually, particularly during the lockdown, I got into online yoga classes. And honestly, it's so convenient. I really don't want to ever go back into a yoga studio. And all the yoga studios which are now open are actually offering online as well as the face-to-face classes, because they've found a lot of people like myself just found the convenience, the transaction cost reduction associated with travel time, etc. So it's likely to become a sort of permanent sticking point. But that's just one little example. But there are lots of others. The one thing that sticks to mind, just at random, was a volcano erupting in Indonesia back in 1815. Harvest ruined, food prices increased, a lot of deaths from famine. Horses disappeared because the owners couldn't feed them. I suspect people ate them. And as a direct consequence of that, this German gentleman effectively developed something to replace horses, which he at the time called the running machine, loosely translated, but we know as a bicycle. Another example is Alibaba, which was a tiny retailer, but as a result of the SARS epidemic, became the huge e-commerce retailer that it is in Asia and indeed globally. So I guess the critical thing for all of us as leaders in the C-suite, finance teams, and so on, is to really look ahead. And this is where a lot of companies pretty early in the piece set up these plan ahead groups or teams or whatever, is to think about how things are shifting and therefore what opportunities their particular organization could have. So, for example, if I were to think of Australia, we are moving towards becoming a low-touch economy, potentially lots more contactless commerce, possibly a cashless society. Certainly, the use of cash has dropped quite a bit. There was a rude shock with supply chains, and a lot of organizations are reassessing the resilience, diversity of their supply chains, just-in-time inventory policies, and so on. And that presents opportunities in other parts of the world, but also within Australia for more local supply. There's been a big shift to working from home. That's the WFH across the economy. And the chances are not everyone's going to come back full time, because people have realized that there can be productivity gains if it's managed appropriately. And linked with that, there has been quite a bit of a migration to regional people actually moving away from big cities to the regions. Now, all of these for different types of organizations can, and this list is not, there's a lot more things we could sort of rattle off. And I'm sure it's going to be exactly the same in Sri Lanka, different types of shifts, but nevertheless shifts. And I guess the critical thing is to try and identify in your business context the new customers, markets, or opportunities that could present itself. As Sun Tzu said a long while ago, 500 BC, in the midst of chaos, there's always opportunity. And I think that's a classic case for that. This is just a quick summary table. And look, I think Professor Wadawala will probably put these slides up or whatever, so you don't have to worry about the fact that I'm flashing past it, which we took out of, which I've just taken off a CPA briefing, one of the CPA briefings I was involved in, which actually just summarized various things and put them in boxes. The big caveat is it's going to vary by business to business. For example, there's one, I think, preemptive, I disagreed with that actually. Preemptive capital raising was left in the longer term. Personally, I would have had it in the middle box or the one on the left. So it's, you know, there was a bit of a subjective assessment here, and it's going to vary depending on the organization. Okay, let's get on to leadership. So governance and leadership is obviously critical. CEOs, CFOs, and management will need a lot of support. The demarcation between boards and managers blur a bit in this situation. And one of the things I've said is, in a crisis situation, you may need to review your natural normal style. So what I mean by that is, if as a leader, you're normally a very consultative, I need to talk to everyone and get their feedback before making a decision or whatever, that sort of style, that may be great, but it may not be the most appropriate style at that initial response stage, and you don't have a chance in hell of operating that way in those first couple of days when you have to make some very quick decisions, etc. On the other hand, that sort of style, so you may need a slightly more authoritarian style. On the other hand, when looking at the reimagine or whatever, consulting widely, speaking to people, understanding what's going on, using data analytics to understand what's going on in social media, what's happening in certain industries, etc., becomes more important. We could talk for leadership on hours, and we obviously don't have the time to do that. But one of the things I thought I'd focus on was to introduce you to some thinking done by some people who published something in the Harvard Business Review, where they basically said that leading effectively during a crisis often means going against your natural instinct. Now, we'll talk about these quickly, but an obvious example, so that you just contextualize this, is what's instinctive when facing uncertainty is you'll ask for additional information, you'll want more information. Well, in a crisis, you often do not have the time to wait for that additional information, and you're probably going to have to act fairly urgently. So we'll just go through this, and then go through a couple of other things. So, as I said, potentially dangerous in a crisis, and you're going to have to be making decisive decisions based on incomplete information and correcting yourself later as you go. I'll be talking about Jacinda Ardern, the New Zealand Premier bit, and her mantra of go hard, go early with COVID probably led to New Zealand being one of the leading countries in managing the health side of the pandemic. But obviously, it's a judgment call in terms of what you do, or what happens to your economy. It's the speed of elegance. Another example was the bloke who headed up, Adam Silver, the Basketball Association in the US, suspended the season on the 11th of March. That's extremely early, because he read the tea leaves and made a decision. Trump was hopping mad at the time. You know, he was talking about the fact that this was all going to be over by Easter, and you know, it'll just go away and all this sort of stuff. But this was, again, someone who made a very quick judgment. Communicating with transparency. And again, just a little quote from something Ardern said, which ticks off a lot of boxes, but she was someone who actually, through this crisis, is one exemplar of someone who communicated extremely clearly. Her background is in communications. I think she's got degrees in communications, and it kind of shows. And even when she announced 4 levels of COVID alert systems, etc., one of the first countries in the world to do that. Australia followed suit about a month later, but she also based it on their fire risk system, so people were actually used to the concept. There's some academic theory and research which talks about in order to get the best out of people and motivate them, leaders must address three aspects. They're called direction giving, meaning making, and empathy. And they argue that leaders overuse the direction giving and underuse 2 and 3. And again, in terms of examples, and I think leadership, so much of it is about communication. If you consider Arden's central message, where she said, stay home to save lives. Clear direction, but with some real meaning and purpose to save lives, right? Very effective. And those are the posters and all this sort of stuff. Other little things in terms of communication. When New Zealand was in lockdown, she actually did a Zoom broadcast like this to the nation, wearing a sweatshirt, so no suits or whatever, which a lot of New Zealanders would have been doing, with a lot of her daughter's toys lying around in clear view, which again, a lot of New Zealanders, I'm doing this presentation with a dog under my feet, and could probably get quite anxious soon because it's approaching his dinner time, right? But that's the way most people are kind of operating. I won't get into that. The other thing it basically say is, look, take responsibility and solve problems. Leaders often, mistakes are going to happen, but just own it, fix it, and sort out systemic issues. Often leaders can get defensive and not prepared to do that. And without pointing fingers or mentioning his name, there's been a primary example of that in the political arena. The other thing, again, is as a leader, it's often, whether it's financial strategy, the broader company strategy, you say, we've set our strategy, now we're going to stay the course. Well, in this sort of environment where things are so dynamic and there's so many moving parts, you have to be prepared to continuously update, revise what you plan on doing as new information comes in and so on. Your team members in your crisis team and so on may need to change, ditto your advisors and so on. So again, it's a bit counterintuitive compared to the normal scenario. The other thing that I'll throw in is that it has been argued that it's important, and leaders often go back to core values and purpose at times of crisis. I said versus accountant's instinct, because often when you go back to purpose, etc., it may not be the optimum for the bottom line, and it may be counterintuitive or instinct, but it serves a purpose, particularly at a time like this. Some quick examples. A classic that is talked about a lot is Heinz in the US during their Great Depression. This is pre-COVID, where, notwithstanding the fact that it wasn't the most profitable way to go, they realized that so many of their customers, etc., were out of work. 1/3 of, I think, the population in the US was out of unemployed or whatever at the time. And they prioritized producing cheap staples that people could afford to buy. Whilst other companies were laying off their workforce, they actually kept it to the minimum, and in fact made a point of trying to hang on to their workforce during this time. No surprise, they were one of the companies that came out amazingly well post-depression, and with a great reputation, brand, loyalty from customers, employees, and so on. BHP Australia, one of our largest mining companies, in the current crisis, I was listening to an interview from either their CFO or their CEO, who talked about the fact that whilst their normal payment terms to suppliers was 30 days, they put out an edict that all smaller suppliers, however they defined it, would be paid within 7 days. for as long as the crisis went on, because they realized once they had some cash resources, or they could manage their cash resources, a lot of these smaller businesses were going to be struggling. When grilled, the person said, look, it just goes back to our values, our core mission, our culture, and our shareholders are beginning to understand that. I could give quite a few examples. And I guess my critical message here is think about this, because when you come out of it, people remember, your stakeholders remember, your employees remember. From my personal experience, just ignore these little call-out boxes for the moment. I've found that sometimes it's difficult, but maintaining your own composure and standing tall, a brave face, and being composed is really important. And to keep going back to purpose, to keep reminding yourself what your mission is as an organization, what you're trying to do, and keep going back to purpose. And interestingly enough, I just had these 2 bullet points and another visual or whatever, but this morning I was reading a piece that was put out by the Australian Institute of Company Directors. They were just spruiking one of their conferences, and they were talking about the fact that their keynotes were going to be 3 leaders. One was a mountaineer, one was someone who led polar expeditions, and the third I can't remember. And the mountaineer, as part of the spruiking, said, leadership, particularly through adversity, climbing mountains, snowing, whatever, is not about, and leading a team doing that, is not about being bold or brave, but rather than staying calm. So my earlier point of being composed. And the polar expedition person talked about promoting a common purpose through your team is essential for effective leadership, especially when the time gets tough. And that's something that I've found as well, particularly when the time gets tough, reminding people what your core purpose is, I think is important. As part of the wrapping up, and I'm going to try and do it quickly, one of the things I wanted to do is to encourage people, this is a general thing actually, to think, read, and listen to people outside your disciplinary silo. And I mean not just accounting, but business. And here's some examples why. Everyone talks about the fact that there was no real rule book for the pandemic, particularly when it first hit, all the uncertainty and so on. And yet, there is an 8-volume, 10-volume, it's a large tome, book, series of books written by Von Clausewitz called The Principles of War and Companion on War, which is based on the Prussian War, but is still standard text at West Point, Sandhurst, I'm sure the Sri Lankan military academies, etc. And they talk about the fact that planning a military campaign is very difficult because things move very quickly and makes all your detailed plans obsolete, and that military leaders need to make decisions under extreme time pressure with incomplete information, since much of their actions are concealed by this fog of war. But he also gets into some deeper principles and strategies to kind of get around this. So I guess my point is, there may not have been a playbook for COVID, but if we could have learned from military strategy, which would have helped us through this process. And another saying I love is General Rommel talking about saying that no plan survives contact. Again, from personal experience, again, the military context, I was on a Wharton Business School leadership program. It was about a week and a half, and literally half the program was analyzing the Battle of Gettysburg in the American Civil War, Shakespeare, including Henry V, and the famous battle when the Brits, against all odds, beat the French. And again, it was around dissecting strategy and leadership, which translated perfectly into a business environment. Sport is another great area. I'm a proud Australian, Sri Lankan origin, but and gee, I hate those All Blacks, but you got to respect them because they're statistically one of the most successful sporting teams in history. And there's a book by a chap called James Kerr, which if you haven't read, I'd encourage you to read, which talks about what the All Blacks can teach us about the business of life, equally applies to business, which is actually referenced in top US business schools and is mandatory reading for the US Navy SEALs who operate in tight teams, right? So again, something that you can learn. Personally, I haven't for about 5 or 6 years, but I was a rugby union coach for quite a while in Australia. And honestly, things move around. I would do a gap analysis on opponents and even in your own team in order to identify a strategy on how you want to play a particular game. That comes from business. At the same time, I learned a hell of a lot about mentoring and leadership from the sporting environment as well. In fact, far more the other way. So I guess the message there is not just in a COVID context, but we can all learn a lot from other disciplines and thought leaders in other domains. And a lot of the very successful leaders I know, CEOs, CFOs, do read widely outside the business disciplines, not just accounting, but the business disciplines. So just to recap, we talked about the phases. I want to throw in never waste a crisis, because the crisis does give you an opportunity to do some cleaning up, sorting out some stuff, getting rid of some divisions, whatever. We talked about the fact that leading in a crisis often goes against one's natural instinct. Communication is important. We've just talked about the importance of thinking outside the box and reading and listening outside and keeping going back to purpose and kind of standing tall. So I think I'll stop there, and we'll go to I'm happy to take any questions, Lakshman.
Thanks, Paul. I think it was a very, very good presentation, and many areas of thinking out of the box and combining it with sports, which is something that I think would certainly help everyone. So what I will do is, I think I have not seen, if anyone has any questions, kindly send it on chat or Q&A. But I will now invite Manil to give a few expert comments on Paul's presentation.
Thank you, Professor. I think Professor Paul Mehta touched on a lot of very practical areas or issues where how to overcome this kind of a crisis. Specifically, I think I like the point where you mentioned, Paul, that you shouldn't look at a crisis in a negative tone. You look at the opportunities that the crisis actually brings about, which is very valid in today's context. A lot of people look at it negatively, and I have seen many businesses in Sri Lanka, doing this knee-jerk reaction of going into cost-cutting mode, which I don't believe is the right way to go. Yeah, you trim the fat, but not necessarily cut the costs. These are times where investment needs to take place as well. And one example from a Sri Lankan point of view I like to mention is during this crisis, we saw a lot of businesses, how they adapted to the current scenario, and a lot of new businesses came out where the traditional old type of business found it difficult to be agile enough to respond to the current scenario. So which also shows opportunity. Again, one of the to mention some of your examples, one of the hotel companies here, they knew tourism was bad, hotels were bad, so they immediately converted themselves, say, like for example, offering their cleaning services to outside people, to businesses, right? So that shows the innovativeness of the people, and also adapting to the current situation. They immediately went into outsourcing, providing food to households, delivering them and things like that. So which I think goes to show what you mentioned is something that you need to do. And so what you sort of mentioned was very apt in today's scenario. Sort of military type leadership or decision making is necessary, because you're actually facing the unknown. You don't have time to sit and figure it out, or say whether these vaccinations will be the answer to this whole story. No one knows. But you need to react to the current situation and then move forward. So I do. I'm definitely sort of in tow with whatever you are saying, and I think it's good for our businesses and our finance professionals also to uh, probably learn and understand the circumstances we are in, and how our finance professionals can actually contribute and help businesses to navigate this whole equation, which is not only a local problem, it's a global problem. It is bringing in new challenges, no doubt about that. But at the same time, I think there are a lot more opportunities in this as well, which I think people need to now look at and take it forward. So thank you, Professor.
Thank you, Manil. Paul, you have any comments on what Manil?
I'm glad Manil gave some Sri Lankan examples of the hotels. I mean, similar sorts of things are happening in Australia with restaurants, for example, and suppliers to restaurants and whatnot. But I think I also read somewhere that particularly initially, when there was a shortage of PPE, as there was in Australia and everywhere, a lot of your textile manufacturers pivoted fairly quickly and started producing face masks and gowns and that sort of stuff as well, which is kind of a fairly logical thing to do. So now look, I endorse that comment, and I hate to say it, but particularly for consulting firms, I think there's going to be some short-term pain, but medium, longer term, there's great opportunities, because a lot of businesses are going to need help and your expertise in sorting this sort of stuff. I just picked consulting firms because I was responding to Manuel, but yeah.
Thank you, Paul. Hinaka, you have any comments on Paul's speech?
Thank you, Professor. Professor Paul, you mentioned about BCP and the business content plan in your presentation. However, these are very simple and practical questions. As financial professionals, they get involved in preparation of and implementation of business content plan in their workplace. And generally, they inbuilt almost all possible business and other risk factors into the BCP for successful implementation. But as a result of the current pandemic situation, all have realized that they need to do much more in developing their business continuity plan. So any specific advice that you could provide to financial professionals on this matter?
Sure. Look, so I'll make a general comment first. So one of the things we realized in Australia, and I'm sure Sri Lanka is no different, there was a survey done by the Governance Institute of Australia, which found some horrendous stuff where like 40% of even relatively larger businesses did not have a business continuity plan. For starters, 30, 35, 40%, which is worrying. And of those who had it, only about 10% tested it, sort of stress tested it, did any simulation or whatever, which is necessary in certain types of environments. So look, it has been a challenge everywhere. And I think one of the other challenges is, funnily enough, when I presented the similar thing to CPA Australia, and we were talking about in the context of scenario planning, exactly the same area, someone asked me the question, but can you ever plan for this sort of black swan event? And the answer is absolutely not, probably. You can plan for parts of it, but I don't think anyone could fully anticipate the full ramifications that's impacted every aspect of business, the way we live, society, our health, and all this sort of stuff. So look, the only thing I can say is, as they say about sort of strategic planning at times, that even before COVID, that increasingly we are living in a fast-moving time. And there was a school of thought, which, McKinsey's and people talk about the fact that, is strategic planning dead? And the answer is no, because whilst plans may become redundant a lot more quickly than they were before, the process of planning and thinking around your strategy, etc., is critically important. And I think the same applies with the business continuity plans. You're never going to get it perfectly right. You're never going to be able to anticipate every contingency. But I think the process of thinking about it means that you've at least got some thinking coverage of 40–50% of the issues, and you've got the teams in place and the thinking and the processes in place to try and help you with the others. So beyond that, it's kind of difficult to say without knowing a particular context, but it's a very good point you raise and question, because, as I said, I'm involved in 2 boards. I'm on the audit committees of both for obvious reasons, and the chair of one of the audit committees. And the one thing, this firm that has dealt with the crisis amazingly, they've been actually very successful because of some pivoting they did. The one area they really struggled with, and the CFO struggled with, was the scenario analysis and trying to stress test and rationalize the 3–4 scenarios, and then to try and prepare sort of financial projections based on those scenarios. They had to be dragged kicking and screaming to do it, and it was problematic. But it was interesting in the process of doing it, you started thinking of lots of other contingencies apart from the main things that could actually impact when things would reopen or when certain things would happen, which again, obviously all had financial implications. So beyond that, there's not a lot I can say, but it'll vary quite a bit depending on individual businesses.
There's a question here, Paul, how an organization can manage the employee's mindset in relation to financial benefit reductions due to cost cutting in a crisis situation.
Sure. Look, that is a very difficult one. And I've seen a couple of examples in Australia where it's been done reasonably well, and companies have bought it. And I guess it'll be a couple of things off the top of my head. I don't pretend to be a real expert in this, but this is just my thinking. One, clear communication, and going back to the sort of things I was talking about, you've got to sell the proposition. You've got to frame it in terms of time. You've got to frame it in terms of consequences. So one organization that did it extremely well basically said, look, we need to do this, because if we don't, we're going to lose X jobs. And it'll probably be compulsory redundancies. If not, we could have a small voluntary round, and we should probably be able to get by for the next year, as long as everyone takes 10–15% pay cut or whatever. It's quite significant, but a lot of finessing beforehand, a lot of sharing of financial information to show that there was a crisis, show the budget gap, show the implications of not implementing a pay cut. It would mean 300, 400 of your colleagues, or 400 of you, would effectively lose their jobs. However, if we did this, then the implication was we would actually get the budget gap down to X, and with some voluntary redundancies in certain areas that are identified, we should be able to ride the crisis. So yeah, it's about sharing information to make it very transparent, clear communication, explaining the consequences, and then trying to get people on board, and going back to purpose. Again, reminding people, why this business is important, and why this is important, why it's important that we continue beyond just jobs and money and all that sort of stuff, if you can. Yeah,
Yeah, one final question, Paul. That was really on the what you mentioned about the SME sector. I think you briefly mentioned, but you did not go into any detail. But is there a lot of them are having difficulties, maybe on the finance, on the marketing, on production? Um, so many areas that are there, or also on the labor side, where they have to maybe lay off or retrench. But what was your sort of experience, or how did maybe Australia is a country that has really been able to work very well with the SMEs? How was this really carried out, and how did
Okay.
they save them?
Okay, so I will start off by telling you, I'll give you, tell you something that's going to sound very counterintuitive, but we did a briefing on for boards around potential financial distress around COVID and how to try and manage that and that sort of stuff. And in that process, I extracted information on liquidations and insolvencies, administration. And we looked at, I put up a graph of 5 years, and what it showed was in the first 6 months or so of COVID, 6-9 months of COVID, the amount of companies formally going into administration was about 40% lower in Australia than the equivalents in the last 5 years. So the initial thing was the data is wrong. The data wasn't wrong. It was right. But there's a couple of reasons for that. And the reasons for that, I think there were two big factors. The first is the federal government stepped in very early and provided, apart from providing sort of increasing unemployment benefits and things to help people who got unemployed, they provided incentives, but providing you met certain thresholds and you could show that your profit had come down a significant amount or whatever, and it was a very easy test over 1 month or whatever, you could get something what was referred to as a job keeper allowance, where for every employee you kept on the books, you got $1,500, which could be passed on to the employees. So some companies actually just reduced the pay and just passed on the job keeper. And the government was happy for even that to happen because they wanted the employee to keep that connection with the employer, because when things picked up, it was just much easier to get them back on board, etc. So that was one issue which helped enormously, and it actually helped the SMEs and the companies that were sort of struggling. There were various other financial benefits, sort of reimbursement of various GST sort of sales tax equivalent. I'm not sure, I'm sure Sri Lanka has something similar, and so on. But the other thing they did was Australia has some very tough, what's called insolvent trading laws. In other words, as a director on a board, you can be personally liable for a company's debt if a company continues trading after it becomes technically insolvent, right? And that's a serious concern for directors, all directors in Australia. They relaxed those rules and they basically said, providing you've got advice, providing you've done analysis and you're confident that you could possibly ride out this storm, you will not be liable for helping a business continue, right? So that was hugely positive. The downside is this: JobKeeper is going to end at the end of March. And we think these insolvent trading laws could also go back to, they may go back to the original one around the same time. What we're predicting is an awful lot of businesses will actually just fall off the cliff at that point because of that. But the other thing that you've got to be careful when you're doing this intervention, it sounds good, is unfortunately, there will be a lot of zombie companies that probably were teetering on were struggling, and COVID really just re-emphasized the point that they should be closing down anyway and going into liquidation, which are now propped up and have continued for much longer than they really should have, and making their financial situation worse. So in a nutshell, in Australia, the stats have been amazing in a positive way because of government intervention. but we could have a lot of people falling off a cliff when some of those support mechanisms get lifted.
Thank you, Paul. I think what you mentioned of the government intervention. So this is something that, of course, even in Sri Lanka, more than the government, of course, the banks had to take the brunt of it, and of course, assisted with the central bank. And as you say, when the moratorium comes to an end, then only you will have to see what the real impact is going to be. It's similar to what you were saying about the government JobKeeper scheme. So thank you, Paul. I think we are very grateful to you for spending your valuable time with us. So may I now invite Mr. Hennaka Bandara to give a vote of thanks to Professor Paul Mehta.
Thank you, Professor. Ladies and gentlemen, on behalf of CMA, I'm glad to propose this vote of thanks after a very successful webinar conducted by Professor Paul Mehta, one of the advisory council members of CMA. As mentioned by our president in his welcome speech, Professor Mehta is not a stranger to CMA. He has helped CMA in the past in numerous ways in conducting CPD programs and providing technical inputs to enhance the professional program of CMA. With that note, let me thank Professor Paul Mehta for the insightful presentation, sharing experiences and research findings to educate us on the subject of finance leadership during a crisis. I'm confident that the guidance provided by him will assist all of you to enhance and strengthen your leadership abilities as a financial professionals to overcome any obstacles that you may face during a crisis situation. Let me also thank our President, Professor Lakshmana Vatawala, for the leadership and guidance provided to organize this webinar under the CPD programs to improve the skills of our membership and other stakeholders. I also would like to thank council members, members of the Institute, invitees, and others for your participation for the webinar, and the CMA team for the support extended to conduct a timely, important webinar. Thank you all. Take care. Stay safe.
Thank you. Thank you very much, Hennaka. I think Manil, on behalf of the Institute of Chartered Accountants and of course, as a council member of CMA, just 2 words would be useful here.
Professor, thank you, Professor, and Paul, thank you for that very insightful presentation. I think many businesses and financial professionals in Sri Lanka will definitely benefit from that presentation, and I hope that they will take these points to their businesses and probably start working on some of these areas, because I think it has now come to a time where we need to put this whole saga behind us and move forward, because I don't think this is going to sort of, you're not going to get up one morning and see that this has all gone off. It's not going to happen. So we need to now sort of stop lamenting on the past and sort of move forward. And I think your presentation and your insights into certain areas will definitely help our professionals, our accounting community, and CEOs to actually try and get their businesses moving forward. Thank you again for that insightful presentation, Paul.
Thank you, Manil. So thank you, Professor Paul. I think we are very appreciative of your work. I know that you are still helping us in different areas of digital analytics, big data. So these are the latest things that are happening. I'm sure that will really take forward our profession. So once again, let me thank you and wish you all the best, and look forward to see you soon. Okay, thank you. Bye.
Okay, thank you.
Thank you, Professor. Thank you, Maya. Thank you, Professor.
Thanks, Manu.